For its tolerant investors, Nvidia produced enormous multi-bagger gains. The greatest picks and shovels for the AI gold rush are still being sold there. In relation to its potential for long-term growth, the stock appears to be well valued. The leading indicator of the rapidly expanding artificial intelligence (AI) market is Nvidia. It is the top manufacturer of data center discrete GPUs, which are utilized to handle challenging AI workloads. The majority of the leading AI firms in the world, such as Microsoft, OpenAI, and Meta platforms, rely on its chips to run their most recent AI applications. Since then, Nvidia's stock price has increased by almost 1,230%. Its yearly revenue increased at a compound annual growth rate, CAGR, of 64% from fiscal 2020 to fiscal 2025, which concluded in January, from $10.9 billion to $130.5 billion. Its adjusted gross margin increased from 62.5% to 75.5%, and its adjusted net income increased at a CAGR of 83%, from $3.6 billion to $74.3 billion. With a $4.41 trillion market valuation, Nvidia is now the most expensive corporation in the world, thanks to its astounding growth rates. But after that huge rally, is it still wise to purchase the stock? To find out, let's examine the bull and bear situations. Why Nvidia is still adored by bulls. The bulls will tell you that intense demand won't go away anytime soon, and that Nvidia continues to sell the best picks and shovels for the AI gold rush. Grand View Research projects that as more businesses create new AI goods and services, the global AI industry will grow at a compound annual growth rate, CAGR, of 31.5% between 2025 and 2035. According to JPR, Nvidia owns over 90% of the discrete GPU market, and its AI GPUs are regarded as the best-in-breed chips for AI applications. Its own CUDA Compute Unified Device Architecture programming platform serves to further solidify its dominance. AI applications that are written in a standard parallel code, such as C++ or Python on CUDA, are optimized for Nvidia's GPUs, but are incompatible with chips made by its rivals. In the data center industry, AMD's less expensive Instinct MI300X GPUs compete with Nvidia's premium Blackwell GPUs. But when it comes to managing the majority of large-scale AI and high-performance computing (HPC) applications, its Blackwell processors continue to perform better than the MI300X. In order to increase its moat against AMD and other possible rivals, it also uses sticky strategic alliances to lock in its best clients, such as Alphabet's Google Cloud, Microsoft Azure, and Amazon Web Services, AWS. As it continues to lead the AI chip industry, experts predict that Nvidia's revenue and profits per share, EPS, will expand at a compound annual growth rate, CAGR, of 36% from fiscal 2025 to fiscal 2028. At $183, the stock still appears to be fairly valued at 30 times the earnings for the upcoming year. The bears will alert you to AMD's recent AI agreements, Nvidia's vulnerability to the complex trade disputes and tariffs, and a possible slowdown in the larger AI business. In late 2023, U.S. authorities prohibited Nvidia from exporting its high-end A800 and H800 data center GPUs to China. In August, they extended the prohibition to encompass the company's less potent H20 version processors. In September, Chinese authorities then prohibited their own businesses from purchasing Nvidia's chips. Nvidia's sales to China, which made up about 17% and 13% of its revenue in fiscal 2024 and fiscal 2025, respectively, will be drastically reduced as a result of the ongoing confrontation. Oracle and OpenAI, two of Nvidia's biggest clients, recently signed new agreements with AMD for AI infrastructure. These agreements imply that certain AI firms are keen to lessen their reliance on Nvidia, expand their AI infrastructure with several chip kinds, and lower their long-term costs using AMD's more affordable CPUs. Thus, even though AMD is still a far-off underdog in the AI GPU market, it has the potential to challenge Nvidia's hegemony, just like it did for Intel in the x86 CPU market 10 years ago. Last but not least, stricter government regulations may impede the AI market's explosive expansion, particularly in relation to its use of copyrighted goods, its displacement of human labor, and privacy issues. Should those more stringent regulations align with a more general economic downturn, large AI firms may reduce their aggressive GPU acquisitions. I don't think Nvidia will be able to duplicate its multi-bagger gains from the last 5 years. However, it has many irons in the fire, is still growing like a weed, and doesn't appear to be overpriced in relation to its potential for growth. Although investors should monitor its regulatory and competitive risks, I think it's still worthwhile to purchase at present prices. There is increasing rivalry for Nvidia's GPUs. Over the next 5 years, AI is expected to increase significantly, according to some projections. The stock of Nvidia has had an incredible surge. About no one could have guessed 3 years ago that Nvidia would overtake all other companies as the world's largest corporation. With a valuation of $2.28 trillion, Apple was the market leader, while Nvidia was valued at a lower $298 billion. However, in response to the extraordinary demand for artificial intelligence, AI, Nvidia has soared to the top of the market and is now by far the biggest corporation in the world. While investors are unable to invest in Nvidia in the past, they may forecast the company's future over the next 3 years. There are, in my opinion, 2 main possibilities, and one of them is more plausible than the other. To help investors decide what to do with the stock at this time, let's examine Nvidia's future trajectory. Graphics processing units, GPUs, manufactured by Nvidia are special because they can perform several calculations at once. Because of this feature, they are ideal for handling demanding tasks like mining cryptocurrencies, running engineering simulations, processing visuals for games, and training AI models. Nvidia GPUs are essential components of the AI value chain since they were used to train the current generation of generative AI models. For Nvidia, this has resulted in previously unheard-of increases in sales and profits. Given such growth rates, investors could be questioning whether there is still room for expansion. Fortunately, there is. Numerous agreements with Nvidia and its partners have been announced by AI hyperscalers, which will once again break the record for data center capital expenditures in 2026. Although this is encouraging for Nvidia, investors are becoming more worried that the company might be losing market share. AMD and Broadcom are the 2 main offenders. In an effort to show other AI businesses that AMD's products are competitive with Nvidia's, which hasn't been the case, AMD recently inked a significant agreement with OpenAI, the company that makes ChatGPT. Nvidia may lose market share as a result of some businesses implementing less expensive AMD hardware. Nvidia's GPUs cannot be directly replaced by Broadcom's CPUs. Rather, they design and manufacture unique AI accelerator chips in partnership with the end user. Because of this, unless you rent them via the cloud, they are impossible to get if your business is very tiny. To make these chips practical, however, the AI hyperscalers have a lot of resources to collaborate with Broadcom. Because Broadcom's chips are made with a single workload in mind, they can perform better than Nvidia's GPUs at a cheaper cost, but flexibility is sacrificed in the process. The market dominance of Nvidia, which is thought to be around 90% of the market, is threatened by both of them. Nvidia is still the most widely used computer system for training and executing AI models in spite of these 2 issues, and it will continue to be well-positioned for the upcoming surge in AI spending. When Nvidia predicted during its Q2 earnings call that global data center capital expenditures would exceed $3 trillion to $4 trillion by 2030, many investors were dubious. However, other Wall Street firms swiftly followed up on that audacious prediction, recommending comparable or higher levels of AI spending over the ensuing years. This will bode well for Nvidia, especially with Nvidia estimating that global data center capital expenditures will total around $600 billion this year. This suggests a compound annual growth rate, CAGR, of almost 42%, which may mean that Nvidia will continue to develop quickly during this period. If Nvidia maintains its current price and achieves 40% growth over the next 5 years, it will grow from a $4.58 trillion company to a roughly $25 trillion behemoth. It's difficult to imagine a firm that size, but if the AI market continues to expand at the anticipated rates and Nvidia holds on to its market share, that's where it's going. Nvidia is currently a screaming buy if that's the case. It's also possible that Nvidia loses a significant portion of the market or that these estimates are inaccurate and AI spending declines. The former is always a possibility, but I don't see the latter occurring. If so, Nvidia's stock will probably fall as a result of less money being spent on AI. I'm inclined to think that the spending estimates are accurate, because we haven't even begun to explore what an AI-first society may look like. If those predictions come to pass, Nvidia is a must-have at these prices, but only time will tell. The market leader for GPUs for data centers is Nvidia. By the end of the decade, it is anticipated that the skyrocketing expenditure on data centers would reach $3 trillion to $4 trillion. The price of the stock is still appealing. Nvidia has become the largest firm in the world by market capitalization, riding the wave of artificial intelligence, AI adoption, to unprecedented heights perhaps more than any other company. The graphics processing unit, GPU, which provides the computing power that powers artificial intelligence, was invented by the business. Many scientists think AI is still in its infancy, but there are a lot of opportunities. As of this video, Nvidia's stock has increased 1,150% since the early days of AI in 2023, which has caused some investors to pull out. However, the majority of experts predict that AI adoption will persist for many years to come. How high may the AI chipmaker go from here, and what does this signify for investors? To ascertain the potential stock price of Nvidia by 2030, let's examine the evidence that is currently accessible. The modest GPU's original purpose was to make the graphics in video games come to life. This was made feasible by a technological breakthrough known as parallel processing. Simply put, processing speed rose multiple times by dividing massive computer tasks into smaller, more manageable pieces. This allowed for the creation of lifelike graphics, something that was simply not achievable with the technology that was available at the time. Nvidia used this cutting-edge technology to address other computer problems, such as mining cryptocurrencies, machine learning, an earlier area of artificial intelligence, and setting the groundwork for self-driving cars. But the tidal flood of data center spending is what will make AI widely available. 2026 is expected to be another record-breaking year for cloud providers, even after capital expenditures this year reached all-time highs. According to estimates, Nvidia's largest clients, Microsoft, Meta Platforms, Alphabet, and Amazon, have set aside an astounding $454 billion for capital expenditures in 2026, a 26% increase. The majority of this expenditure is expected to support their individual AI goals. Nvidia will probably receive the majority of that investment because it holds a commanding 92% of the data center GPU market, according to IoT Analytics. Don't believe anything I say. During the company's earnings conference call, CEO Jensen Huang disclosed that when you add semiconductors, accelerators, GPUs, and turnkey AI supercomputers, Nvidia will account for about 58% of data center infrastructure spending. Nvidia may make up to $1.74 trillion in 5 years, as total data center spending is predicted to increase to between $3 trillion and $4 trillion by 2030. Even though Nvidia has been the clear leader in the data center market, competition is growing and some competitors are starting to emerge. For some much-needed context, let's turn to the past in the spirit of conservatism. The industry research firm Del Oro Group estimates that global data center spending reached approximately $455 billion in 2024. Nvidia made $115 billion in data center revenue for their fiscal 2025, which concluded on January 26. This amounts to almost 25% of the world's data center spending in that year. By 2030, Nvidia could make $750 billion in data center income annually, a 552% rise in just 5 years, if data center infrastructure investment hits $3 trillion, the lower end of Huang's range. As of this video, Nvidia has a forward price-to-sales PS ratio of 21 and a market valuation of approximately $4.4 trillion. Nvidia's stock price could rise 263% to $663 a share, bringing the company's market capitalization to $16.2 trillion if its PS stays the same, and it generates $750 billion in revenue over the course of a big order. Remember that this is a fun exercise with numbers and a mental exercise. Over the course of 5 years, a lot may go wrong because reality is messy. Customers may start purchasing GPUs from competitors, which has partially already started. It may turn out that predictions of an AI bubble are accurate. Spending on AI could be restrained if the economy takes a negative turn. But don't let the trees take precedence over the forest. The majority of prominent developers choose Nvidia's GPUs because they are the industry standard for AI processing. The majority of businesses are fighting for a share of the revenues from AI's promised avalanche of efficiency gains. Therefore, even if Huang's projections are incorrect, they are probably directionally correct, which means Nvidia has a lot of room to develop. Additionally, Nvidia is reasonably valued, selling at only 29 times its anticipated earnings for the upcoming year. I believe that's a reasonable price to pay for the market leader, considering the magnitude of the opportunity and Nvidia's position in the AI ecosystem. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.